Welcome back to 7-Minute Options on Monday, August 9th. I'm back from a 2-week vacay, looking at my positions for the first time in almost 2 weeks and trying to pick up the pieces and figuring out exactly what has transpired. So let's check it out. Let's start with Pinterest. So we opened up an earnings play in Pinterest, and I find that I've been assigned 100 shares. So what had happened was, back on July 23rd, I sold the 66 naked put, and I sold the 84.85 call spread, credit call spread there. That was my earnings play. And my plan was initially that if this was going to go below 66 on earnings, then I was just going to end up rolling out that position. And so that's what happened. It went under 66, but I never had a chance to roll it out because I got early assignment. This almost never happens. But if you look at here, the position had an August 6th expiration date, and yet I was assigned the 100 shares on August 2nd. So what most likely happened there was the person who bought this put contract from me just decided to exercise early, which is well within their rights to do so. So I got assigned 100 shares, perfectly fine. Actually, since then, the shares went up a little bit, so I could sell them for $59.09 as of today. So I got a couple of options here. I can sell this right now and basically just recover $6,000 of the $6,600 that I spent, and then sell another put. So basically just open up the same put again in the next month and basically end up in the same thing as if I had rolled the position. Another option I can do is just sell a call against it, right? Because at this point I have 100 shares, so why not sell the call? So if you look here, let's see, Pinterest is trading for 59, and I want to get some money out of this one. Obviously, I want to try to recover my losses. So right now I'm down about $300 or $400. Remember, we collected, if I look at these three, we collected $140 in premium for the 3 contracts. The call spread expired on Friday. Out of the money. It's only the put spread that got exercised, right? And so if I look at the 140 is what I collected, but right now I'm down about $693 on the stock itself. So the difference between them, 693, 140. So I'm down about like $550-ish. So if I take the 100 shares, I can, let's see what I can sell on pins here. So trade, if I go out 40 days, September, there we go. So 66 is where I got exercise. So if I try to sell a 65 call right now, it's $128. I can try to sell a 62 call for $190. And maybe that's the way to go, is I try to collect $190 in the next 40 days. And then if the stock price moves up, I just keep rolling this out. I'm not planning on taking any vacations in the next few months, so I'll be around to watch this more carefully. But basically, I'll be able to just roll this out and hopefully collect a little bit more premium. So it might take me 3 or 4 months to recover this, but that is my plan to do so. So if it rises back to 62.5, I'm actually going to be fairly close to breaking even on this one. So that's what I'll do. Now, another question is, why am I not selling like the 65 or 67? I could sell the 65 and collect 128 for it. In that case, if it does rise to 65 and I collect the 128 and I let go of the shares, I will be actually back to even. I'm thinking if I sell the 62, is just I'm going to get a little bit more money quicker, collecting a little bit more premium. If you look at the theta here, the closer you are to the money, the higher the theta is. So the theta of this position is 3.8, while if I go out, that's 3.4, 2.9, and so the theta starts dropping. So right now I just want to recover money. I could also sell the 60 and collect 280, but then rolling that may become less ideal. But maybe there's nothing wrong with selling the 60. Right now it's 59.01, so that rises 100. I collect another 280. You know what? Let's do that. There's a lot of people in both. The markets are pretty tight in both, so I'm okay with selling either one. Let's sell this one. 60 call, 280, and I'm going to have to keep rolling it up as Pinterest recovers. So yeah, let's do that. 280. See if somebody buys it from me, and I'll start my slow recovery on getting that money back. All right, some of the other positions here. Let's see. On days to expiration, and there it goes. Pins is filled. Perfect. So hopefully I can get some of that money back. Let's see what else we got. 4 days expiration on QQQ. Oh my goodness, what a cluster. Yeah, so we have the 360, 355 put spread. Again, this one is what we almost turned into a strangle in an effort to try to get some of the money back here. So now, as we see here, it's way past our long call position here. So this is where we were. There's not a whole lot I can do at this point, right? This narrow band that you see here, that was the point where if it ever touches that, I get to roll it out or maybe close it. But at this point, if I am 4 days away, I'm looking at a kind of like a max loss here. There's not much here left to roll. If I roll this position, let's say into September, let's see what happens. So I get $41 for rolling this out. But if I move it out into September, what do I get? Okay, let's look at the September monthly on QQQ. Wow, there's a lot of expirations here on QQQ. There we go. Wow, not a whole lot. That's okay because the strikes change. That's so annoying. Yeah, that's right. Okay, so if I want to roll this out 2 weeks, let's say I get $34, right? Okay, and then the call spread is going to be much harder to roll because that's fully in the money. So that's probably going to cost me money to roll, and it does. It costs me $75. So at this point, I might just let this basically go. Maybe the best option here is, yeah, this is way past the point where I should have managed it. So it's too little, too late at this point. I can just, if I close it out today, now this is a it's a $5.50 wide position. I can close it out for $4.30. Maybe that's what I do 4 days to go. Is there any chance it's coming back? Not really. It's kind of flat. It's going sideways. The RSI has been high. It's not coming down. That was the whole thesis behind this back in June, is that the RSI is high. It's not coming down. I got 4 days to go, which is not bad. I only have 4 days to go, and I can close a $550 risk for only $430. Maybe I do that, and I just close it. So I spend the $430, and I get rid of it. I already have the closing position, like I always do. So cancel this one. Yeah, close this out for $430. Bite the bullet on this one. Again, it's beyond managing, so I'm not going to manage that one. I can't. And then this one, the put side, I'm just going to let it expire because there's still $13 left to gain in 4 days. So might as well try to recover the $13 and let it expire worthless. But 429, 430. Yeah, this should close. I feel like the market on here is pretty tight. Now it's 431. Give me a break. All right, so let's just leave it there for a few minutes, see if that closes. Again, a bit of a pain on that one. How are the rest of them doing? PayPal, what happened to PayPal? This used to be at 300. Oh my goodness, PayPal. Yeah, okay, that's not cool. That was not expected. Okay, well, just have to wait on that one. Still have 39 days to see what happens on PayPal there. So 333.40 debit spread. How much does it cost to roll this out and buy us more time? Significant money. Okay, so I'm just gonna let that one go. PayPal, that one already paid for itself, so I'm not too worried about it. But still, it would have been nice to see it go past 300. And I was very optimistic about it when it was hitting these highs up here. Look at that! Look at that massive drop in the RSI. Yeah, had a bit of a correction there. Okay, what else we got? Let's see. 11 days to Astra. What kind of position we have in Astra? Oh, it's a strangle. That's cool. Okay, 11 days to go. 12 and a half, 750 put. Let's keep rolling this out. Let's roll this out into September on the put. Let's collect some money there. And we got earnings on August 12. Oh boy. Okay. And let's see. Let's roll out the 12 and a half call. If I roll it out into September, I'm gonna roll it up. Let's roll it up to 15. Yeah, pick up a little bit more money. So basically, keeping the same thing. I'm keeping the covered strangle there, and I just want to buy more time. So I'm pushing it out to September, picking up not a whole lot of credit, but a little bit of credit. And by going up from 12.5 to 15, it gives me a little bit more of a cushion in case there's a big up move at the earnings. So let's see what happens there. 11 days DIA. This is an iron condor. Okay, and we're $100 up. Oh wow, we're right at the GTC limit. That's perfect. So hopefully that will close out today, and I can collect a $100 gain. That's perfect. Fubo, what's happening in Fubo? Did we hit earnings yet on Fubo? Let's see. Earnings are coming up on August 10th. After the bell. That's tomorrow. Fantastic. Okay. What should I do there? Let's see. Yeah, it's all flat. Look at that. The IV is all flat. Not a whole lot to do there. It's just bouncing around. So with Fubo, 11 days. Yeah, let's see what happens after earnings tomorrow. Let's see if it keeps going up or if it keeps going down. If I want to roll this up and out, let's say out to September, I don't pick up a whole lot, do I? September monthly, I can pick up $100. Maybe even roll it up to the 30. Pick up 56 to the 29, 28. Yeah, I feel like that's a good deal there. $57 to roll it out to the $29 strike in September. Let's do that. So let's pick up some money there. And then on the put side, I can just roll this out into September, pick up $74, buy myself more time. I'm actually happy with that. That's perfect. And so we'll see what happens at earnings, but I feel like there's quite a bit of movement there during the earnings. And I have quite a bit of time after earnings to manage that in September and see where Fubo ends up. Anything else that's expiring? 11 days RMO. All right, so this RMO just continues its meltdown. Unbelievable. Let's try to roll this out to September. Wow, brutal. Oh, there is no $15 strike. Wow. Okay. RMO, I had a $15 put, and now it's $6.85. And if I look at the September monthly, there is no $15 strike anymore. So now if I want to go down to the $14 put, I have to actually pay money to go down. Because, I mean, in reality, I'm facing a major loss there, so I'm just trying to buy some time here. Ooh, yeah, there isn't a whole lot of options here. Yeah, that's annoying. That RMO position is genuinely annoying, so that's what I'll do is I'll just, I'll buy the bullet there. I'll roll this out to September into the 14 strike, pay 95 to do it. So I can wait another month before I manage it. Hopefully that's going to have some kind of a turnaround there. That's a really painful position. Let's see, 11 days to SLV. So we're at 21. I got the 24 put and then the 26-28 call spread. Pain in the ass. I can let the 26-28 call spread expire. Oh, that's a debit call spread. Okay. Let's see. Let's just roll it out to September on this one. I'm not going to get a lot of money here because it's a little bit. I got to close the positions, of course. And this one here. Yeah, I'm just going to. The 26-28 is going to expire out of the money. And the September one, I'm just going to roll down into September. So I'm rolling that one out, collecting some money. The debit call spread's going to expire, worthless. Let's see. SoFi, 11 days to expiration. What's happening in SoFi here? Oh, I got a whole bunch of stuff in SoFi. And it's at 1675. I'm going to wait till tomorrow and roll all these positions. That'll give me some time to wrap my head around it before, so I don't have to go through it position by position on this call, but I'll do it tomorrow. Let's see. SPY, 67 days, 8 days to... Oh, yeah, so the VIX is just there. That's my hedge. XLK. We got a $19 profit so far. Oh, this is a nice little strangle. That's cool. Oh, it's actually it's a vertical. Sorry. 155, 160 credit call spread. I'm at 154 on XLK. Wow, it's just climbing up there. Yeah, so we got the move back down that we were initially hoping for, but then since then it has crept back up. That happens. In this case, do I try to roll it out or do I wait for it to close? Roll expirations. I can get $100 if I roll it out in September. Yeah, I'm going to wait to see what happens the next 11 days. There's a good chance that if this moves down to 153 or 152, I'm going to reach my 50% profit and just exit this position. I feel like that's a better chance than waiting for it to, than rolling it out a month and not expecting it to go above 155. So, all right, that's where we are today. Yeah, lot of pieces to pick up after being away for 2 weeks. That kind of sucks. Yeah, maybe I should have brought my laptop on vacation. Anyway, thanks for the long video. Thanks for sticking with me. All right, thanks. Bye.